Right. Hello, everybody. Steve Griffiths here, developer of the MT Predictor software program. As you can see, this is a slightly different webinar presentation package than we normally use. I'm just testing this one out to see how well it works. So I'll be very interested. Excuse me, if you guys would let me know how you find it from your end, coming in from your end. So if you want to just let me know whether you can see the chart okay, see the risk disclaimer. There's a question and answer box. If you just move your mouse over to the left-hand side of the screen, you can see there's a question and answer box where you can type in your questions there. So if you just let me know whether you can see everything okay, just type in the question box and just let me know whether that's all okay. Right. So yeah, towards the end of the webinar, I'll ask you what you think of this this package and see whether it's easier from your perspective and whether you like it and whether it looks quite good, whether it's easier to use. So I'll be interested to get a bit of feedback later on. But let's start by looking at our risk disclaimer. So as usual, all examples in this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all trade decisions are your own sole responsibility, and you must accept that losses can and will and do unfold. No matter what trading approach we take, there always will be losing trades, just a fact of any trading approach. Right, where should we start? Let's have a look at some TradingView charts, because a few you guys have come in who are new to MT Predictor, so welcome to you guys, and some of you are using TradingView charts. So I just want to have a look at our general approach on how we look at MT Predictor. I'm just going to have a look at a 15-minute chart of the NQ. I'm just going to blow that up so it's whoops, didn't want to do that. I wanted to do that. I always get that wrong button there. Right, so the approach we take is the same whether you're using TradingView, our standalone version, our NinjaTrader add-ons. What we're talking about in this webinar is the how to use MT Predictor. So, you know, it's exactly the same approach no matter what way you take. So is MT Predictor a black box system? Do we blindly take all our setups as if it was, you know, 100% mechanical trading system? Well, no, we don't. We don't do that because we know and understand that markets are random about half the time. So 50% of the time, or maybe slightly more, markets will be random. So how do we decide whether the picture's clear? Well, for this, we go to the higher time frame chart. So if you're, say, trading a 3-minute chart of the NQ, you'd go up to a 15-minute chart for the higher time frame. You're looking for a time frame between 3 and 5 time frames higher. So if you're looking at dailies, you'd be going up to the weekly. If you say looking at a 4-hourly chart, as we will a bit later in the webinar on some Forex examples, you'll be looking at perhaps the daily time frame. So how do we then decide on whether the market picture is clear? Well, for this, we place our DPs on the charts. I'm just going to do the bar replay and go back to here on TradingView. Let's go forward a couple of bars. So how do we decide whether the market picture is clear? Well, here you can see the market starting to rally up. So for this, if the market's starting to rally up, we're then looking to place a DP off the last pivot high, which would be off this pivot. So let's just pull up our DP script. You know, in TradingView, we have to work off our scripts. You'll see in our standalone and our NinjaTrader ones, you can just do a right mouse click. So for this, we have to select that pivot. We can either look at the number of pivots back. So here you can see that be 1 pivot back, 2 pivots back, 3 pivots back. Or if you wanted to, you could display the pivot labels by clicking on that, and that would just tell you what the label is, or what the bar or what the label number is. By the way, if you're using longer time frame charts, ideally you want to increase this number here. So for a 15-minute chart, you can see 10 days back is fine, but if you're, say, using a 4-hourly chart, you really wanting to be going up to about 40 or 50 days back. So you want to make sure you have enough days back to be able to do enough calculations. So you can always try just displaying the pivots just to make sure they do display. So here I'm going to come down to this second section. Do you remember what I like to do with this? I like to have the pivots back on the first DP section. So this is just a small number. Then if you're using, say, the bar numbers, I come down to the second section and I leave that on the bar number, sorry, the pivot number, not the bar number, the pivot number, and then this will be like a slightly higher number. So I'm coming off pivot number 52. So you can see that. I'm coming off pivot 52. I'm then going to tick that to enable the DP, and you can see it's displayed on the chart there for you. Now that took a bit of time to me to do because I was explaining it step by step. Once you get used to doing this, you can do that really quickly. What I do now is I just tend to close that down. Whoops, actually, what I might have done. No, I'll just close that down. That's actually fine. What I tend to do now is I tend to put a rectangle around the DP, because if you change time frame, you don't want it to recalculate when you change time frame. So I go to drawing, I get a rectangle. I tend to just place that round the level there. I then tend to lock it like that. Sometimes you can put some text in if you want to place some text in there. Up to you, but if you want to put some text in there, you can, up to you. So I leave that rectangle locked. I then go back to the DP. I then take the DP off. I'm going to take the pivot labels off as well. And then that leaves that rectangle on that level. So that is the higher time frame support, the 15-minute support. If I turn training mode off, well, first, before I turn training mode off, can you see how that's on the chart in advance? This is the important thing. This is what we do with MT Predictor. We're not working off alerts. We're not working off scanners. We're not working off things like that. We're working off placing things on our charts in advance. We're there trying to work ahead of the market. So that's there before this market gets up there. So I turn training mode off now. You can see what the market did. Do you see that? It went up to that level and then reversed at that level. So in other words, that's what we're looking for the market to do. We're then looking for it to reverse at our projected or anticipated levels. We can then come down to the time frame we're looking to trade, which would be the 3-minute chart, and we then can see whether there were any setups in that direction. Now here there weren't. Sometimes that happens. That's what I discussed a couple of weeks ago. It's very frustrating sometimes when you can get the market reversing at your level and then nothing happened. But that's just, you know, part and parcel of life. That just happens. But it does show you how these DPs can then gauge the large degree trend. When you're on the time frame you're trading, that's when we use our MTP trend color. Can you see how it's blue for up as the market was rallying up? It then went gray as it was in the process of making a reversal. And then can you see how it was red along here as the market was coming down? So that's like our secondary indicator. Don't use this as a first indicator, use it as a secondary one. The market came down. Where did it come down to? Well, it came down to this area here. So would that have been a good support area? Well, if we go back to the 15-minute chart, I'm not going to use training mode this time. But for you guys who are here last week, you'll remember that when a market is retracing back, like this, it's retracing back again. This is where we use the last swing. Do you see that? That's the last swing into the high. Isn't that? That's the high. This is the last swing into the high. So let's go to DPs. You know, at the time, this would probably been either the last pivot or the number of pivots back. Let's use the pivots back this time. So if this is the last pivot, so that's 1 pivot back, 2 pivots back, 3 pivots back, 4 pivots back, actually 5 pivots back. So 5 pivots back, click enable, and that then projects the DP on the chart. Now remember, that would have been on the chart in advance before the market gets there. And of course, if you're a bit further back in time, you know, this pivots back would have only been 1 or 2. But look what it did. It came down and hit that level really nicely. So let's just place a rectangle on the chart there again. So let's see what happens when we change time frames. Just remember to take that off so it doesn't. Did I lock that? Just want to make sure it's locked. There we go. So it's locked so it doesn't wobble if I catch it with my mouse. So we go back to our 3-minute chart and now we can see what happened. Can you see that? The market went all the way down to that 15-minute support zone before it started to rally back up again. Now, this was quite important because if you're just looking at the 3-minute chart, can you see how here you might have well thought that a rally was coming in here, but of course it hadn't reached its higher time frame support. So that's why, you know, you're anticipating a further decline down here into this higher time frame support. After this, the large degree trend will then be deemed to be up. So you'd then be looking for long trades. And of course, there are some sell setups here, so you'd be ignoring those. But do you see how you set the idea of having the higher time frame DPs on your chart to try and anticipate future support and resistance zones? And that's really critical because that's when you deem whether the picture's clear. So in this particular circumstance, the picture was clear here as it came down because it was reversing at the higher time frame resistance. Coming down, our MTP trend helped confirm that into this area where the higher time frame support was, the picture was still clear. It's now deemed to be rallying. So in other words, because it was doing what we anticipate, we deem the pictures clear. Does that make sense? I hope it does, because I'm just going to skip over to NinjaTrader here. I'm going to pull up the same chart, this time in NinjaTrader. I'm now going to go to the ES. So the ES, here's exactly the same 15-minute chart. So in this case, as the market was starting to rally up here, which DP would you've chosen? If I put a bit of white space on the on the right-hand side here, let's try and so I can just drag it across a bit. So before it got there, it's like when you're in that particular circumstance. So this is a good example of why we don't try and place these DPs on it manually, because you know which prior pivot do you use? Well, is it that one? Is it that one? Is it, you know, which one is it? Well, fairly obviously, hopefully you can see by looking at that just by eye, the last sort of major pivot, if I just run my mouse along here, can you see how the last major pivot would have been back here? Do you see that? So that's why we do this by eye and we don't let the computer do it, because if it's confusing, if you get a choppy period like this, which you very often do in the markets, then it's better to do it by eye. So you'd come back to this pivot. Here you can just right mouse click now and now do decision point. I'm just going to take the maximum off for now. That will be then the area of resistance. So that would be the area where you anticipate the market's going to find resistance. But look what happened. Wow. Right up to that level there before then reversing off. Where was it going to? Well, that was the last swing into the high, wasn't it? You see that? That's the last swing into the high there. So there's the high. That's the last swing. So you right mouse click here. You do DP. Look where it went down to. Went right down to that level. Of course, if it had exceeded that, then the next previous pivot to use would probably be back here. Then after that, probably back to here. So that's the what you need to do. Now, obviously, then the large degree trend was down between that level. It's been up since then. So if we have a look at the shorter time frame chart, were there any setups there? Again, it was very frustrating that you didn't get any sell setups. But if there had been sell setups between that DP and that DP, can you see how the picture would have been clear through that time? Does that make sense to everyone? If you could just let me know whether that you're all happy about that, then that would be actually great. Particularly you guys who've been who's relatively new to us. Keep talking to me through the question and answers box, so I can see that you guys are all happy about it. Right, I think you all are happy, which is good. So what's the market doing at the moment? Well, if we have a look at the 15-minute chart, again, I'm using the 24-hour session here because we are before the main market is opened. So what would it be doing at the moment? Well, here the market appears to be rallying up off the support. Where would the first area of resistance be? The first area of resistance would be off the last swing into that low, which is there. So it'd be off this pivot. I'm just using the typical one. So that would be the next area of resistance. So at the moment, the market is probably in an uptrend. So can you see how when you're on the shorter time frame, now you'd be looking for potential buy setups? So that's an example of what we're looking at the moment. And of course, it hasn't reached that level as of yet. Is it going to reach there? I don't know. All I know is that's the next area of major resistance as of the moment. Oh, thanks, Mazir. Yeah, this is a Zoho webinars, so hopefully hopefully it's easier to use. From my perspective here, doing the webinars, it's a lot easier than Zoom. But obviously, I want to make sure that it's good for you guys who are actually, looking at it from your angle. Right. So at the moment, we'll be then waiting for buy setups. That's when you could then have your market analyzer running. I just add another instrument in there. You'll be looking for buy setups. That one might be on the day session only, actually, so it's not a 24-hour session. So that's sometimes the confusing part. Because if I look at the columns on NinjaTrader, if I look at the 3-minute one here, you have to make sure the session times are correct. Oh, that is trading hours 24/7, so that should be okay. So we should be having a VS set up on the ES on the 3-minute chart. So let's have a look and see whether there is one there. There it is there. Now, would that be a good setup to take? Well, it is in the direction of the large degree trend, but our volume spike or our VS setups are where the market makes a reversal from an important previous high or low. So can you see how this one here is just making a reversal around this level here? So this probably isn't an important psychological high or low. And in fact, actually, to have another a better look at this, I want to perhaps go to the NQ, because there's a great example of this a day or so ago. If I scroll back, there were two VS setups here. Okay, there was a VS buy setup there and a VS sell setup there. Now, if you guys who want to look at this in a bit more detail, because I know you guys are, because you're very much on the ball on this, is they were both at 15-minute support and resistance. So that VS sell would have been at 15-minute resistance. This VS buy would have been at 15-minute support. But if you look at this here, can you see how this VS setup was as a result of the market making a break to new lows? Perhaps if I put the cursor on like this, can you see if I just drop the cursor there, can you see how that was a fairly important psychological low there, wasn't it? Do you see that? That's a fairly major low. So this bar here went down to new territory below that psychological low. That's when it snapped back and reversed. This is what we want to look for on a VS buy setup or a VS setup. We want to make sure it's a movement that fails to new highs or lows. In other words, if you're an amateur trader, so if I just go back like this, if you're an amateur trader and saw that, it would look like it's now making a break to new lows on high volume. Can you see there's the high volume? So most amateur traders would look at that and say, yippee, it's now going down. It's now a new break to new market extremes. And therefore, they'd want to try and sell this. Because we have the advantage, because if we go back to this pivot here, we right mouse click, we do decision point. Can you see how we were in and around our DP level? The next bar, can you see here, the next bar here, it then fails to follow through and snaps back and reverses back again pretty sharply. So that says to us that the volume, this high volume here, denoted by this red bar here, this high volume here was not actually selling, it was buying by professionals. So can you see how that was a break beyond a fairly important psychological high? Sorry, psychological low. I get my highs and lows mixed up, don't I? A psychological low. Compare that to this one, this VS. So this VS was a failure in around this this level. It was at DP resistance as well. Okay, it was a failure just at this level. But can you see how this isn't really a major extreme, is it? Because look, the market has come down from here, and if anything, this is just an ABC correction, isn't it? Do you see that? So if I right mouse click here, do Elliott wave intermediate, it's just an ABC correction, A, B, C, right at the typical wave CWPT. So can you all see the difference there? How this one was in and around the break of a new move to new lows, whereas this sell was only just coming in and around a sort of minor swing in an otherwise established downtrend. Can you all see the difference? Because it's quite important to see the difference, because this is a good VS buy setup. Sorry, good VS setup. This one is not. And if I scroll on, you can see that's the result. You can see that whoosh, up she goes. If you're a bit more of an experienced trader, I'm just going to place the analysis on here. Can you see how the analysis was actually for a 2.3 hour profit, only up into that target there? However, if you're a bit more experienced, and this is what I was trying to look at yesterday, if I go to the higher time frame chart, this actually came in around here. And lo and behold, if I right mouse click here, do Elliott wave intermediate, can you see how this move down to that low was actually a 1, 2, 3, 4, 5, was actually a 5-wave move. And that VSL was actually off the DP from that pivot. It's actually the DP off that pivot there. I'm just going to take the maximum off because we're not using that at the moment. So can anyone tell me if the market moves beyond the DP from a previous or prior wave 4, where's the next level that you were anticipating it's going to go to? This is something I've talked about before. If you guys who've been with us for a while should know this. So if a market goes to the DP from the prior wave 4 and it goes beyond that, where's the next level we anticipated to go to? What pivot can we take the next DP off? If you guys in the questions and answers can let me know, that would be great. If you guys are taking a bit of time with your typing, we know that then retraces the entire prior 5-wave sequence. So we go back to the start of the sequence, which is here. This one here, this is the start of the 5-wave sequence, isn't it? So we right mouse click, we do DP off the start of the sequence. So that's where it's typically going to go to. So can you see how if you'd now been on the 3-minute chart, just go back to where it was. So that would be your initial target there, 2.3R. Can you see how that would be the higher time frame resistance, which is what you probably anticipate where it's going to go to? So can you see how, if you're a more experienced user, you probably want to then try and go out to that higher time or the next higher time frame resistance area, which then will have helped increase your profit up to 8R. So that's something that hopefully some of you guys would do. On the psychological side, this would have been awfully hard because if I can grab that, not letting me grab it, so I'll just take it, redo it again. Psychologically, the market got to here, we're on 7.5R. Can you see that? 7.5R before it traced all the way back down to just 3R, just here, but then before it went all the way back up again to about 8R. So you never know. At this level here, you might have well have said, I'm sitting on just over 7Rs. You might well want to just trail just below the 1-bar lows. And if you had have done, you'd have been stopped out about here at about a 6R profit. That would have been okay. That would have been perfectly acceptable to do, because I know psychologically, this is what we talked about last week. Psychologically, sometimes letting your trade run can be really, really hard. So I understand that trying to let it run through a retracement like that and back up again, even though technically it did work, psychologically as a human being, it's very hard to do. That's why if you have the MTP trade module, what you can do is when it reaches this level here, if you come over to, it will be this section here because it will be active because you're in an active position. What you can do is just click on bar. Do you see the way I've hovered my mouse? That one that says bar will then trail your stop just above the 1 bar low or the 1 bar high. So in other words, it'll then trail it below that level, then that level, then it will stop you out there. So that's quite a nice little thing to do if you're using the MTP trade module in NinjaTrader. If you are close to your target and you are sitting on 7, 8R, 6, 7, 8R, then don't be ashamed at all to just say, okay, I'll just start trailing at the 1 bar high or low, and just in this case, take a profit of 6R out of it. That's absolutely acceptable, if that makes sense. Right, are there any questions on that so far? So what I want to do is now perhaps go over to our standalone versions. We've had a look at all of them, and perhaps now have a quick roundup of some Forex markets. So hopefully what you've seen so far makes sense. In other words, what we're trying to do is we're trying to place our DPs on the chart, have them on the chart in advance, and then use that to see whether the market is going up into those levels, to then see whether the market picture's clear, which will only be about half the time. And then we look on the shorter time frame to see whether their trade setups in that direction. So these are the levels we've had on the, this is a Euro US dollar daily chart we've had on the chart for a while. I'll just take those off to just show you where they came on from. Remember, this was the last swing into the high, wasn't it? That was the high there. This was the last swing into the high. So we right mouse click off that pivot. That'd be an area of support. You can see that caught that beautifully. Again, using the same analogy as the market was rallying up here. This would have been the last swing into that low. Do you see that? That's the low. That's the last swing into that low. This would be an area. That pivot there would be an area to then place the DP on. The market came to that level. So you can see this swing here was nice because it went from DP resistance to DP support. What's it doing now? Well, this is the last swing into the low. We right mouse click here, DP. That'll be an area of resistance. We're now looking for the large view trend to be up from here. Now that doesn't tally with this color here, but then you're not trading off this time frame. So you're placing the DPs off the higher time frame. So you're not looking at the MTP trend color on this higher time frame. You're just placing the DPs on it. We now come down to a shorter time frame, in this case, say a 4-hourly one. This is when you can confirm with the MTP trend. So this is when we're looking for sell setups on the way down there. We're looking for buy setups on the way up there. Now, remember, we looked at an even shorter time frame, I think last week before, was it? Where we looked at a 1-hourly chart and saw a buy setup in there that then had you going up very nicely. But if we look along here, you can see that there was a buy setup here with a history triangle. That's what these little triangles are. They're history triangles. This allows you to right mouse click over the blue buy bar. Remember, if you're placing the analysis, you have to place it over the correctly colored bar. This gray one won't work. See, if I try and do it over the gray one, nothing happens. Because for a buy, you need to be over a blue. For a sell, you need to be over a red. So right mouse click over the blue buy bar allows you to place the analysis on. So I know some of you say, well, why does the history triangle, why are some of them profitable and some of them losing trades? Well, it's the only reason is because these are placed on when the pivots change, and they only change when you get a very short wave C swing in the ABC correction. Can you see here? This wave C was only just 1 bar. Do you see that? So because that was so short, as the market rallied back up again, what it meant is then the pivots recalculated, so that then went to a single swing rather than, so if I use our training mode, and you see how at that point it was A, B, C, but then as we go forward, it then just does as a single swing. It only does that when you get a very, very short wave C. But what we wanted to do with MT predictors, we never want to hide anything, because Because I don't know about you guys, but there's nothing worse when software vendors have what could be potential losing trades or something changes and they then hide it. They like sweep it under the carpet. That I think is quite naughty. So that's why here, if the market does change or the calculation does change because of this, I won't say rare, but unusual situation, we do then place the history triangle at that level there to make sure it tells you that there was a potential trade setup at that level, and then allows you to place the analysis on to see what happened. So, we never want to hide anything. So, of course, that was in the direction of the higher time frame uptrend. So that would give you a small profit of plus 2.2R at the first target. Our MTP trend was blue stroke gray, not red, because we wouldn't be looking for a red MTP trend. So that would have been a good one to take. Of course, here you wouldn't want to be doing a sell setup because you'll be looking for the market to go up. Here, again, you wouldn't looking to do a sell setup because you're looking for the market to go up. Do things work that well all the time? Of course they don't. Let's have a look at the British pound. We go out to the daily chart. Here is the British pound. Let's take that off. As the market was rallying up here, that was the last pivot high. So you would have placed a DP off there. It did go to that level. So now when you come down to the shorter time frame chart, can you see how here there's a history triangle? There would have been a potential sell setup at that level at the higher time frame resistance. If I go back to there, can you see how you would have had a VS sell? Our MTP trend had gone grey at higher time frame resistance. Right mouse click over this red sell bar. That was an awfully small bar, by the way, a very, very small bar. So if you're on our standard account, that would have been quite a lot of lots. So if you do get such a small bar like that, you probably want to be a little bit cautious. But then can you see how that would have then taken you in, taken you out? So I just wanted to deliberately show you that sometimes, even though you get good trade setups coming together, everything looks like it's okay, you can get losing trades. That's why the position sizing there would have had a minus 1R loss. That's why we use the position sizing to keep the number of lots, contracts, or shares at the number to then risk only 2% of what size account you're using. In this case, $20,000, or if you're doing a smaller account, $10,000, or what size account you set up in the system. So that would have been a 1R loss. Very frustrating because the market did tip over there, started to come back down. So it's the good, the bad, and the ugly, as I was talking about over the last couple of weeks. Sometimes the markets will just be very, very frustrating. It'll stop you out, then suddenly go in your direction. That's just life. It does that sometimes. So are there any questions on what we've talked about so far? Any questions on what I've said so far? Please do ask away, because this is the time to ask questions. So I can see what you guys are unfamiliar with, or what you guys would like to know more about, or what questions you basically have at the moment. So use the question and answer on the left-hand side. If you just move your mouse, it will basically bring up the questions and answers to the side, and then you can just type in the question you wish. I think everyone's quite quiet at the moment, so that's quite good. So hopefully you're all happy with what you've seen so far. All right, let's go back and have a quick look and see what the market's doing at the moment. So I'm going to go back to TradingView here and see what the market's doing at the moment. So they just seem to be going down a bit at the moment here on the NQ. Oh, I keep doing the wrong box there. Sorry about that. I keep hitting that one rather than that one. So here the market started to go back down again, so it hasn't gone up and reached that next resistance level. So we're sort of a bit in no man's land there at the moment, with not a lot going on. And the ES, Yeah, the ES was sort of in no man's land there at the moment as well. So I think we'll just have to wait and see how the rest of the day unfolds and see if we get a bit more of a clearer picture. But this is what markets do. They are in times when they are just plain frustrating and unclear. It does happen like that. If you can see my chart at the top here on TradingView, can you see there's a question exclamation mark there? Sometimes you can get study errors. Sometimes it just if the TradingView servers are very busy, it can get some study errors. So what you can just do on that, if you just hide it and then show it again, very often that will then just allow it to recalculate. And if it doesn't, try just changing the number of days to calculate, either up or down. I'll try to take it a little bit down to see whether that helps. And there it is. Yeah, it's now okay. It's now cleared that error. So sometimes that happens. It just depends on the load on TradingView, because you have to remember that TradingView is a server-based system. Everything that's going on here, because this is in a web environment, so everything's going on here is going on the servers at TradingView themselves. So it's not working on your PC; it's working on their servers. So it depends what load they've got on their servers will depend on how much time it takes for any script in TradingView to calculate. So sometimes that's why you get some errors on the scripts, because this is all server based. But of course it has many advantages because it's all web based. It's just so easy and flexible to use. I keep clicking that wrong one, don't I? That's the one I want to set it back to just the 3. I've just got 3 charts there. The way I've just set mine up is, as you can see there, it's just the 3 minis side by side. I quite like it like that. Right, Alessandro, yeah, you're talking about the standalone version. If you exceed your margin requirements that you can do, just do a smaller account. So if I go to Tools, Accounts and Risk, what I have here is I've got several accounts set up, just smaller accounts. So we don't actually calculate the margin requirements in MT Predictor at all, because every broker has a different margin requirement and it'd be so difficult to keep up with that. So if you do exceed your margin requirements, what I suggest doing is set up a smaller account size, perhaps one half your current account size. So if you've got an account balance of 20k, perhaps set one up of 10k, and then what you can do with the position sizing is, when you've got the position sizing on, what you can do there is, rather than having a default account of the 20k, you just come down and then just select what the smaller account is, to then have less lots, if that makes sense. So that's the best way to do it, because I know sometimes if you have some very small setups, some very small bars, you can get quite a lot of lots or contracts, depending on what you're trading, calculated. And sometimes that can exceed some brokers' margin requirements. So does that make sense? Just to set up a smaller account, because then it will then calculate less number of lots. Yeah, you can do if you're a NinjaTrader. Let's come back to NinjaTrader here, and if you're using the trade module. So here it says 2 contracts. So if you did trade here, it would then take 2 there. But what you can do is, if you click this box here, it says override the position size. You then can override it to be smaller or large if you wish to see that. So you can override it just to be 1. So when you do the trade, it will only place 1 contract. So that's another way to do it. If you're using NinjaTrader, you can override the position size there in that little box. So we've allowed you to do that there. But obviously with NinjaTrader, exactly the same. Rather than use a default account, you can use a different size account there as well. So you can have a smaller account if you wish as well. Different ways of doing it. So if you're on NT8, you can do that. Sometimes that's the case if you're if you've got your own live account here, this is a sim account here on this particular PC, so I can't show you what it looks like with a live account. But if you just select your live account, sometimes that can happen. So you can actually then change it and have a smaller account size there if you wish, or you can do the override position size there if you wish as well. So hopefully that helps. Right. So are there any last questions there? I don't think. I think everyone seems to be quite happy there. Mazir, I don't tend to forecast where market's going. So Mazir's asked me where I anticipate the British pound US dollar going next. I don't know. I never try to anticipate where markets are going. All I know from this is on the higher time frame. If I look at the daily chart, the higher time frame, we're at DP resistance there. The next DP support would be down here. If it then exceeds that high, the next DP resistance would be off. That's the last swing off the low, would be at that level there. So that's all you can say on that, is that that's the next support, that's the next resistance. I don't forecast where markets are going. So we had the levels on the chart, and that's all we can work. So I think if you try and anticipate, you'll try and sort of say where things are going, then that can be a bit dangerous. Right. Okay. So thank you very much for coming in, everybody. We've now finished on our time on that. So I would be very interested if you could just let me know what you think of this new webinar program that you're using. Perhaps drop me an email, steve@mtpredictor.com. I'll be interested to hear your thoughts on that as you've seen it from your side. From my side, I quite like it. From actually using it from my side, I quite like it. So we'll probably try and stick with this as we go forward. But I just want to make sure that from your side, it's easy to register, it's easy to get in. And I noticed that when you use it, it actually comes in on just one tab on your browser. So that seems a little bit more straightforward than what the previous Zoom was, and it seems a little bit nicer and slicker for having the questions and answers than what Zoom was. So yeah, if you just let me know what you think, how you found it from your side, that would be much appreciated. Yeah, drop me an email, steve@mtpredictor.com on that. That would be much appreciated. Okay, have a good trading week, everybody. So we'll be back and we'll do it all again next week. So have a good trading week until then. Bye.